It's about that time of day again. My name is Joseph. Tuesday evening, October 2nd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is balanced with a trading range tonight. So my plan is to buy low and sell high and focus on those failure patterns. The S&P is also range bound and sideways this evening. So I'm looking to fade those breakouts, and we're going to use that 2-try rule for trading opportunities tomorrow morning. Nasdaq is bearish, and it also has a trading range tonight. So my goal is to sell off the high of that range, and I've got my eye on a key resistance trend line coming down overhead. Gold is bullish and setting up for a beautiful Elliott Wave sequence, and I have my eyes on a key support zone down around the low of a hidden channel for tomorrow. And of course, we can't forget about the euro. Wrapping up on the euro. Euro is bullish and trying to rotate back into the range from Monday. And I have my eyes on a 2-try failure just below the moving average. We'll see if we get that set up in the overnight Asian session. Well, we're back with some more reliable trading opportunities, this time getting ready for Wednesday's trading session. We get a couple strong trends, a handful of ranges, and a couple patterns you may have never seen before. Tonight's newsletter is certainly going to be a must-watch, and we're going to break this whole thing down in just a few moments from now. But before we get into those charts tonight, I need to remind you guys, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave the link in the description of the video. Also, if you have any questions about anything covered in this video, please remember there's a comment section below the video. Drop those questions in the comment section below. And if you like what you see, please don't forget to support this channel by subscribing on YouTube. And when you do, hit that bell icon so you get notified every time I post another video. Oh, and don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets and make sure you join our mailing list. Right? Start your professional trader transformation. All I need is your name and your email address, and I'll send you an email to get that process started. And don't forget, if you have any questions, we have live support and, of course, our toll-free number right in the upper right-hand corner. All right, guys, it's great to be here back with you once again. Let's not waste any time, though, here. Let's jump into that news calendar and see what we have on the schedule for tomorrow. Tomorrow's Wednesday, October the 3rd, and as I mentioned earlier on this week, tomorrow we have kind of the first major news of the week, and that would be from the petroleum status report at 10:30 Eastern time. So that's the big news tomorrow, right? That really only affects crude oil traders, maybe a little bit of nat gas traders, but I'm not much of a fan of nat gas. I like oil personally, and so that will affect us tomorrow for all you oil traders. Don't forget, on Wednesday mornings, 10:30 is the weekly inventory report. My cutoff on Wednesday mornings is 10 a.m. Eastern time. Then after that news comes out, we'll typically start getting back at it around 10:45. We'll wait and see what the dust, right, how the dust settles. We'll look for some recognizable patterns. Sometimes these news events, they come out and the whole chart just gets messed up, and you've got to wait 5-10 minutes before you really get anything that you can kind of sink your teeth into. So it all really depends on how long it takes for us to find either our range or our channel, our measured move, and once we can find those pieces, then we can put the plan together to finish up the session on oil. So most important thing for tomorrow is, if you're trading oil, 10 o'clock is your kind of your cutoff, right? You're more than welcome to trade up till 10:30, but usually after 10 o'clock, it is far too slow to be trading. So get to it early, and of course tomorrow morning we'll be in our trade room bright and early as well, opening up at 8 o'clock Eastern time, and we're going to get right at those oil trades as early as possible. No other major news on the calendar here for tomorrow, right? Don't forget, we will talk about that employment number, that big news on Friday. So make sure you tune in tomorrow night on our nightly newsletter, and we'll talk a bit more about the plan as we go into the end of the week. Now, jumping into some charts here tonight. We got crude, S&P, Nasdaq, gold, and of course we can't forget about that mighty euro. Starting off here with the black gold, the Texas T, crude oil is slightly bearish with a channel, a trading range, and a measured move on the chart this evening. Now, as anticipated, yesterday's big run higher transitioned into a sideways and relatively sloppy day today. The short-term momentum is clearly bearish, but it doesn't take a lot of effort to look left, and you can see that long-term momentum is definitely pinned to the bull side. So we're relatively equal, right? Sellers have some short-term opportunities, buyers have some long-term opportunities, right? We're pretty much balanced right now. So my plan tomorrow is to buy low, sell high, and use that 2-try rule, for the most reliable opportunities. The only concern I really have tomorrow is that inventory report at 10:30, My cutoff is 10 o'clock Eastern time. So time is tight, and we'll definitely be looking for these opportunities as early as possible tomorrow morning. So as we drill down onto this chart, again, long-term trend is bullish, short-term trend is bearish. So we're kind of, one cancels the other pretty much, And we're basically looking for buying opportunities down below the lows, selling opportunities up above the highs. Now, we're going to have a number of these ranges on the chart tonight. So the key really, once we find those ranges, once we know we have a range, is I'm always looking for some sort of bias, So maybe it's a bull bias into a range. If that happens, I want to buy below that low. If it's a bear bias going into that range, I want to sell up above that high. So assume we have, any directional biases. We'll talk more about that as we go. But let's just assume basically, though, we have a market, trading inside of a range. And what you're ultimately looking for is you want to stay away from that middle. I'm going to take the size of that range. I'll copy and paste it up. That'll create resistance, Copy and paste it down. That'll create support. Okay, so basically take the size of that range, copy and paste it up, copy and paste it down. That will create now my resistance overhead, and my support below. These are really where we really want to pay a lot of attention to, because that's where we can get into, for example, buying opportunities, off of the low, and of course selling opportunities off the high. It gives me an ability here now to risk small to earn large, It's one of the big priorities we have as professional traders, Even as a new trader, You want to focus on those opportunities where you can risk small, to earn large. Now, the key though is using what we call the 2-try failure pattern. The 2-try failure pattern is pretty easy. Imagine in a range-bound market, there's a moving average right in the middle. Now, let's say we break down, We break lower. That will bring the moving average down as well. Now, once we get that moving average pulling back, or once we pull back to the moving average, I should say, we now look for that second try lower. At this point now, we've got 1 try, we have 2 tries, and now we can look for that 2-try failure. Now, of course, I'll go over more of these in our training classes, but at this point now, I'm looking for the appropriate signal, to enter that trade long. So assuming we get a good signal to enter the trade long, and we'll go over more details on that in our classroom sessions, I can look for this now, to jump back up into that range. And there's one more thing you want to remember about this, though, and that is the amount of the move lower. Remember, we already know we want to use that level as support, So assume that would make everything better. But now let's take the amount of the move down. Let's project the amount of the move up. And now that gives me what we call the pendulum swing. And that pendulum swing target can really be a great add-on target. Again, at this point now, we're being given the opportunity here to risk small, to earn large, That's the key to success. So first target, of course, is back to the opposite side of that range. Second target, of course, is at that pendulum. Now, at the same time, let's say once again we have that trading range environment, There's that trading range again. Now, how do we break out of this range? What does a breakout look like? Well, as you can assume, if I've got my range expansion here and my range expansion here, right, really, unless we can really punch through that range expansion level, I really can't get too serious about breakouts, right? So you really got to be careful trying to buy a pullback up here, right? Even if it looks really strong, because a lot of times it'll stall out, and right back down again, right? Or the opposite direction, right? We see this real big breakdown, but it'll stall out, and run back up into that range. So as far as breakouts go, you've really got to get through those range expansions, or sometimes the range expansions are so large, right, that you'll have to use a slightly, right, different approach, right? Let's say, for example, that range is really, really large, right? Really large range. Imagine now this is a really wide range, right? And now you've got that big range expansion down, that big range expansion up. You'll see sometimes where the market will run and it'll be so bearish, right? By the time it gets down to that range, right, you're not going to just simply buy that. You want to look for a slightly different approach when that range is really wide. You want to look for this, what we call the one try, two try failure. It'll usually get just back above that moving average. So what you want to remember is when the range is really wide like this and getting out of that range expansion is really difficult, once we get down to that range expansion level or we get that big push lower, watch for those bears to try once, watch for them to try twice, and then we'll look for that signal going higher. You'll see what I mean on this a little bit later on in tonight's video. So I don't want to take up too much of that time here on this one because we've got a lot more to cover here, but there's my trading range. Right, there's my trading range. You can see here we get a bear bias, of course, coming down, and what do we get? One try, pull back, two try, bam, back down to retest that low. Now I really don't need to use the pendulum swing here because you can see it went right to that range expansion, right? So I'm not making this stuff up, right? Range expansion up, expansion down. We're expecting those bears to want to get down to that 74, 76. Again, we got the range expansion level to range expansion level. So that lines up into our next opportunity, right? One try, two try, back up into that range here for tomorrow. You'll notice the size of this range isn't very large. So the narrowness, right, of that range or the lack of any real momentum that can be built here, right? See how narrow that range is. We can be relatively aggressive, right? One try, two try, back up, one try, two try, back down, staying away from that middle. Now, what would a breakout look like? We'd have to get through, right, these range expansions, right? So again, if we go up, 1, 2, go, really push through, right? We call the 1, 2, 3 breakout, 1, 2, 3 breakout, and that 1, 2, 3 breakout, just like it sounds, right? We get that strong move up, that's 1. We get that pull back to the moving average, that's 2. And we get that strong move through, that's 3. Okay, once we get a strong 1, 2, 3 breakout, then I'll find that new channel. I'll mark up that prior swing, and my buy zone now is right between these two, right? Between that trend line and that reversal line. And we'll look for that buy to go back up and retest the high. The same thing is true to the downside, right? If we get that strength, pullback strength to the downside now, again, 1, 2, 3 breakout, let's mark up that low, mark up these two lows, find that new channel, and again, right, you're looking for this area right there, right? That's your sweet spot right there, and we look for that pullback and run from there. Now, if we can break out, the buyers want to go back up to retest the high. If we break out to the downside, though, we got a bunch of movement, right, potential here for tomorrow, right? As we mentioned in last night's newsletter, that 73.40 area, if we can take off the downside here now, we might get a chance here to really get short on this, right, and get some nice money out of the market. That is 73.40. So there's a lot of reasons why sellers will be interested in this thing, but at the same time, though, we're definitely not out of the woods yet here because of this trading range. So pretty simple, one try, two try, back up in, right? One try, two try, back down in, right? And don't forget that two try rule, right? Two try failure patterns, 1, 2, 3 breakout patterns, patterns, ranges, range expansions, pendulum swings. We see these all the time. And you know what? I've got hundreds of real examples of these range breakouts, 1, 2, 3 breakouts, 2-try failures, and I've included them in this free trading class. I'm going to put that in the upper right-hand corner here on the YouTube channel. If you're on the blog, it's right below the video on the blog tonight at Sideways Markets, or if on YouTube, I'll link it up in the description of that YouTube video. So if you want to see literally hundreds of these examples, I've been keeping these examples and keeping them on our free trading class for years now. If you want to see hundreds of examples, right, grab that free course. It will not be a waste of your time. Let's keep going. Now that we got that out of the way, right, crude oil looks great. How about some S&P? S&P is sideways with a trading range, a triangle, right, and a pendulum swing on the chart this evening, right? Now you know more about kind of the plan here. That's why I wanted to go over this at the beginning of tonight's video. The market's momentum is slightly tilted here to the downside. You'll notice a big move down into the trading range, right? But most importantly though, right, we have that pendulum swinging, which is trying to go down, right, to that 29.18. So not only do we have that bear move ahead of the range, but we also, of course, have this collapse back down. So the bears definitely have the wind at their back right now, but let's be honest, right? It's a range-bound market. We're trying to buy low, sell high, right, using that 2-try rule. And, of course, the most important thing, right, when it comes to a triangle, which you can see here, we got that lower high, right, and those higher lows. Most important areas are always around those edges, right? All the pivots of that triangle. So we're definitely watching closely that 29.35. We're definitely watching closely that 29.18, 29.17 half area. Those will be key pivot points for us here tomorrow. Now you can easily see just a beautiful example of multiple examples of the 2-try rule here on the S&P, right? As we go lower, right? As we go lower, 1-try, 2-try, back up in, right? We go back up. Again, you can see kind of the right pendulum swinging higher here. We go up, 1-try, 2-try, collapsing back down. As you can see, these 2-try rules are everywhere when it comes to range-bound environments. We rotate off the low of that range back to the high of the range here, and we're basically looking for any opportunity here to catch those buyers trying to break this thing higher. I like that trend line. I like to go up once, pull back to that moving average, and if we're lucky, we might get something like this tomorrow where we get that 1-try, 2-try, and then we get that what's called a hidden channel pullback, which is where we'll take that sell and then we'll find that hidden channel, right, and sell off of, right, and sell off of that. So you've got your, again, you've got your 2-try failure. Remember, you want to wait for that proper signal to get in that short, and then we look for that new hidden channel, right? That new hidden channel takes us in around the high of that channel, right? You'll notice we don't always get them. You notice, for example, here, it didn't pull back to that moving average, but that's what you're looking for, right? You're looking for that 1-try, 2-try, get that roll over, right? And then also that follow-up at the moving average, right? You've got your 2-try failure, you've got your hidden channel, right? Your hidden channel pullback, right? Your moving average pullback, and then back down, right? We go from there. And again, I've got hundreds and hundreds of real examples, right, of those patterns as part of that free trading class, which is attached below the video on the blog or in the description of the YouTube video, or linked up here in the top here in that information icon. So that's the plan if we can go higher. 1-try, 2-try, back down in. If we can go lower, right, I'd love to get down to that 28, right, that 29.18, 29.19 area because of that pendulum swing. And so, of course, if we can get this party going lower, 1-try, look for that moving average coming over, right, 1-try, right, 2-try. And then if we can get that nice deep pullback, we may be able to get that 2-try into that hidden channel, right? Into that hidden channel. You know, sometimes the market doesn't break out far enough and we can't get that hidden channel pattern because you're inside that range. Well, that would be a beautiful, right, 2-try failure into a hidden channel pullback pattern for that run back up into that trading range. So those are the basic ideas here for the range-bound markets, right, on the S&P right now. What does the breakout look like? Breakout patterns, 1, 2, 3 breakout. Good example here, right? It doesn't matter how strong that move outside is. They've got to hold that pullback and run. And you can see they came nowhere even close to it, right, earlier on this afternoon. So we're going to see a strong move up. That strong move up will set the table for the breakout. We've got to hold that pullback. It'll probably be right above that trend line, and then we can grab that run right off that, or wait for that run off of that high. Once you see that jump off the moving average and we push through those highs, now you know what they're hunting for. They're hunting for that 29.42. Let's mark up that. Let's mark up that channel, and then again, we'll look for that hidden channel pullback, right, for that run back up, right, to retest that high. So stay out of the middle, stay out of the middle. 1 try, 2 try, back in. Again, 1, 2, 3 for the breakout, right? Mark up that prior low, find that new channel, and let's sell, right? Let's sell off that high, right, as we are running lower. We get some nice targets here setting up for tomorrow, right? For the bulls, the buyers want to get back up to retest 29.42. The bears want to go back and double bottom up again at 29.08 tomorrow. Right now, the key is fade those breakouts, 2 try rule, right? Buy low, sell high, and keep your eyes out, right, for that reversal. Now, great example here, right? Great example here on the Nasdaq. Nasdaq is bearish with a trading range, a triangle, and a measured move on the chart this evening. The bears have the short-term momentum. That tells me to look for selling opportunities up at resistance levels right overhead. You can easily see, right, that bear move down into that trading range we found earlier this morning. You can also see short-term, right, the bears have that momentum as well. And of course, if you understand how to use that pendulum swing, right, that pendulum swing highs, right, down to that low, it's going to put us down around that 7,600 tomorrow, right, for that pendulum swing. Now, right, there's no better location to sell than off the high of this range. If price pushes lower, though, we have plenty of support down here, right? We got, again, that pendulum swing, right, waiting down here. But look, we got that big measured move here, too. Right? Get that big measured move down there at that 76.14, 76.15 area. So lots of support waiting in this area, right? Lots of resistance waiting up overhead, right, above the range high. Right now, though, where are we? Yeah, we are smack in the middle of that trading range. As you can see here, obviously, right, we did get that 1 try, 2 try failure into hidden channel pullback for that roll back down, which we've talked about many times already. As we're going lower, we'd love to see this 1 try, 2 try failure into strength. Don't chase after that strength, obviously, right? Don't chase after it. 1 try, 2 try into a 2 try failure, mark up that prior high, mark up that new channel, and look for that buy, right, going back up into that trading range. If we go higher here, we obviously have that trend line waiting overhead. I don't think we're going to need that trend line, but I do, right, want to include that in my analysis. I really think we'll be looking more around this 76 3/4 area. 1 try, 2 try, failure, hidden channel pullback, right, back down, we go from there, right? So keep an eye on the middle, stay out of that middle. We're looking for that market to go up. 1 try, 2 try, failure, right? Get that moving average to curl over, right? And we'll drop it back in, very similar to what we saw, right, coming off those highs, right, earlier on this afternoon. Don't forget, what does a successful breakout look like? A successful breakout is a 1-2 go, right? A 1-2 go. If we do see that successful breakout, we'll find that new channel. This is obviously not trying to scale here. I look to buy the low, right, of that channel. Same scenario here, right, as we go to the downside. As you can see here, right, the buyers, of course, right, want to get down, 1 try, 2 try. Sellers obviously want to get up, 1 try, 2 try. And of course, we're going to look for that strength pullback strength to signify that breakout, right, of this trading range. Right now, though, sitting in the middle of the range, probably not the best time looking for a breakout, so we'll wait patiently and we'll see where the day takes us tomorrow. How about that gold? Boy, now this is a familiar chart. This is a familiar pattern, right? Maybe relatively new to you, but we've seen this many, many years here on pretty much all the markets. Gold is bullish with a hidden channel, a resistance trend line, and a measured move on the chart this evening. The bulls have clear control in the short term, right? Short-term momentum is bullish, right? Should I say, long-term is bullish, and short-term, we're definitely not bearish enough to call this a bear market. Yes, we are pulling back, but as always, right, you probably have heard me say this a million times, anytime we see a strong move in one direction, what do we expect? Yeah, a two-legged pullback and a retest of that high. So we are, I don't want to say guaranteed, but it's a virtual guarantee we're going to go hit that high again at some point tomorrow morning, that 1212, right, 0.3. At least that's what the law of large numbers, right, tells us. Now, the bulls have control in the short term, looking to retest those highs, so we're looking for buying opportunities at support levels. And I can see this price action looks similar to a fifth wave setting up for an Elliott Wave sequence, which would trigger us long down inside that battle zone at this 1204.5, right? Consider this to be your first wave, 1, right? 2. Wave 3 is obviously the explosive, right? Impulse wave, right? That third wave, right, will usually end up somewhere around that 1382 or so, right, up inside that Elliott Wave zone. Like I said, this is a very common pattern here. So here we are, right up around that, right, 382 to 618 extension area. That sets things up, right, for an Elliott Wave pattern. And here's where, right, the rubber hits the road. We take these two highs, we bring it down to those lows, and now we know pretty much where we're looking for, right, a buy pattern, right? That gives us a nice buy pattern. Now combine that, right, with some prior swings, and this really lights us up here right now, this whole area right here, as a great spot to look for a buying opportunity. At the very least, I would like to at least see a 2-try failure below this moving average. You'll notice if I zoom in here a little bit closer right now, we've pulled back relatively strong below the moving average. I'd like to see us try one more time here, and then with the appropriate signal, I can look for that signal to trigger going back up to retest the high. You know, they're really on gold right now, very, very happy to see this potential Elliott Wave, but we may not get the trigger. So I want to be ready, willing, and able for whatever we see here. Now, of course, the short term here is going to be that 2-try failure. Actually, let's do this. Let's go if we pull back. What if we go sideways, right? And what if we run higher here? If we pull back here, it's going to feel relatively bearish here. So watch for that pullback, and you'll notice I have this trend line coming in, right? That trend line will make for excellent support. The problem will be, though, the momentum here will be a little bit bearish. So what the easiest way to do is, let's move this out of here real quick. Let's just say we get that run lower. Right, run lower into our battle zone, moving average comes over. What's the plan from here? I'm looking for that 2-try failure. That's 1 try, that's 2 try, and ultimately I'm looking for 2 potential opportunities here. One is going to be that 2-try signal. The second now is going to be that pullback, and usually that pullback is going to be somewhere around that 382 to 50% level right there, right? 382 to 50, right? That shallow pullback there. So those are the 2 components I'm looking for on the pullback. 1 try, 2 try, 1 try, 2 try. Again, proper signal here for the buy, right? Again, off the low of that channel. Okay, if we don't get that battle zone, right, or that trend line in play, we'll want to wait for that strong move up. That'll get momentum on our side now, and we'll look for that run going back up to retest the high. A beautiful Elliott Wave setup, and then of course, it's always tough to if you've studied Elliott Wave, you know it's always tough to anticipate how far that fifth wave will go. In my experience, and you're more than welcome to argue with me on this. That's the one thing we don't like about Elliott Wave is it's highly, highly subjective, right? An Elliott Wave sequence is an Elliott Wave sequence until it isn't, right? I mean, it's so discretionary, it's so subjective, which is why you don't see me teaching it very much on this nightly newsletter, because it will take you 10 years to really get a good handle on it. I have just kind of studied it over the years, and I know when to spot these specific types of patterns. But the bottom line is that when you see a 1, 2, 3 and you get that big jump like that, right, it's confusing because it's not a measured move, right? It's more than a measured move. So it makes you think that something's wrong. In all reality, take this leg, right? If we do pull back here, that leg now, right, they're going to be equal. So basically wave 1 to wave 5, right? That's the most common. Now again, you'll find some people that will say no, wave 3 and wave 5 are the targets. You can try that, but it's not going to be very reliable. I mean, yes, if you catch a razor hot trend, right, a red hot trend, then obviously wave 3 is with wave 5. But if you're talking about over time, what will give you the best results? The best results will be that wave 1 equals wave 5 all day long, hands down. Again, you might miss some big runners, but those big runners are so rare that you're better off taking your money when you can most consistently. So that's the plan there as we go lower, right? 1 try, 2 try, failure, right, and up from there. Now, what about the short term? Okay, now pay attention here. This is very important. We got a 1 try below the moving average. Look for a 2nd try. Okay, now we talked briefly about this last night, right? If we can get the right signal here now coming off of that 2 try, right? I can look to buy this as it runs back to retest the high. Remember though, the challenge on these shallow pullbacks is if this signal ends up being a big candle, right? We get this big monster signal here right now. I do not want to chase after that. So as we talked about last night, that little trick we talked about last night was take that pullback area, find that halfway point, right? And that's your line in the sand now to be able to go up, buy the pullback, and finish off that high. Now, if this thing goes 1 try, 2 try, and it just blasts back to that high, once we retest that high, hands off, right? Hands off. Once we retest that high, hands off. Okay, we don't want to touch it anymore until we know more of what we're getting. Okay, so hope that made sense, right? 1 try, 2 try, nice strong signal going higher. If we get a nice strong signal, we can get in long, pull back again before we get back to that high, and watch that halfway point, right? Because that will typically be, that's where you can risk, right? That's where your risk is balanced. Anything higher than that and your risk is off kilter and you won't get very good results long term. Okay, so that's if we only get that shallow pullback. Now, the next thing to keep in mind is, what do we do when we go back to the high? Let's play through this scenario here now, because there are ultimately 2 basic scenarios. One is we bounce off the high, and if we bounce off that high, now it becomes a range. Aha! See, now we know what we're doing here. We know the results on this one. What do? 1 try, 2 try, buy back up. 2 try failure, below the low of the range. Okay, so again, the key here is what happens when we get back to retest that high? Do we retest the high and then bounce off the high? If that's the case, find the range, easy. 1 try, 2 try, back up in. Okay, we'll use that trend line, right? Use that channel low, relatively easy. The more difficult part's going to be if we can run through the high. Now remember, we run through the high, we got that, right? We got that next, right? That next measured move, which at that point will be much higher here. Right? Remember, it's important at this point now, this pullback, right? So if that's the deepest part of our pullback right now, then our measured move now is up there, right? So if this is all we get for the pullback, there's your measured move. Okay, if this thing goes lower now, right, your measured move is much lower. Okay, so make sure you understand how to calculate that. If we run higher here now, right, we pull back, we run higher here now, okay, 2 options. 1, look for this to be a new spike in channel, really tight channel. If that's a real narrow channel, right, find those prior swings and we'll look to get aggressive with a trap. But again, it's got to blow through the highs here. It's got to really push through those highs. What you're looking for is a little tiny trap pattern below that prior swing. Trap patterns are my go-to patterns when there's limited time and there's limited space, right? It's urgent. It's now or nothing, okay? And there's that sense of urgency in the market. You'll feel it, right? It kind of feels like a firecracker, right? It pop, pop, pop. It jumps up, right? It barely pulls back, right? So when you see that, you want to think, okay, urgency. I'm going to miss this if I don't get into it. If there's no pullback, there's no pullback. But usually there'll be a little trap there to get you in on that way up to that measured move. Trap patterns are all about urgency and limited space, limited time. Again, I've got hundreds of examples of these trap patterns linked up in the description, right, below the video in that free trading course, or in the upper right-hand corner as part of that free trading class. Okay, so that's the plan there. Now, I'm also, though, watching for, if we do see that strength going higher here now, if it doesn't, right, jump, watch for a new adjusted channel. Okay, and this might set up here where we pull back, one try, two try, right? And we can look for that buy off of that low. Almost identical to what we're trying to get right now. All right, so those are a couple scenarios to consider if we get that jump higher. If it jumps higher and it's just bam, 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 pop, 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 and you can feel it running, right, you're going to have to go in and look for a trap to finish off that measured move. So it's going to be all about the market's personality. A beautiful, beautiful example here on the gold. What would a breakdown look like? What would a breakdown look like? Well, again, if you talk about an Elliott Wave pattern, if this is Elliott Wave 1, then that means anything below 1198, right? You know, what is the rule for wave 4, right? Wave 4, I can't remember all the rules of this stuff, right? But wave 4 can't go below the high of wave 1, right? That's like the rule, right? Once it goes below 98, we're pretty much bearish. Okay, so if we can get a nice strong strength, pullback strength, and run, at that point, it's pretty much just a waiting game at that point now to find some chances here to sell as we go back down to those targets. All right, guys. So pulling out a couple more tricks up my sleeve here, right? Haven't talked about Elliott Wave, and I won't talk about it too much, but just because again it's so discretionary. And in all honesty, I have seen a lot of different strategies over the years, and like any trader, I've taken the good with the bad, removed the bad, take the good, and I've made my own kind of variation of my own strategy, which kind of uses what I think is the best way to use all those old school strategies in today's markets. And of course, don't forget, you can learn more about those by grabbing that free course either up in the right hand corner or below the video tonight here on the blog. All right, I've taken up too much of your valuable time. Let's wrap it up tonight on the euro. Over on the euro is bullish with a trading range and a support trend line on the chart this evening. The bears started with a strong push lower this morning, right? Big strong push lower here this morning, but after two tries, one try, two try, after two tries now for those sellers, we can easily see now short-term momentum is now bullish and likely trying to take us back into the range where the party started from. Now, boy, what a pendulum swing this could be, right? Big pendulum swing down, big pendulum swing back up. That's a tough pill to swallow right now. I think we're getting a little bit ahead of ourselves by trying to call that big move back to 18,000 right now. But I'll tell you, this strong move down, they go one try, two try. If we don't get something going to the downside right now, these bears are going to get restless and this price will rally back up right into that range. So my plan right now is, after seeing, honestly, and we talked about this in the room, after seeing it stick right around that range expansion, right? Here's that range expansion. Take the range, bring it down. Is that a coincidence right there? No, it's not. It's not a coincidence. It looks to me like they had that strong breakdown in the pre-market. U.S. traders came in, gave it their own little nudge lower, but they couldn't finish the job, right? So a little bit of momentum to the downside, turned into a second leg lower, but you'll notice they couldn't get below that 16,000. I think I think the culprit in this, the support level, is that range expansion level, which you guys learned more right at the beginning. So knowing that, right, knowing that here right now, the bears tried once to retest the low. They're trying twice to retest the low. The only thing we haven't seen yet is an explosiveness higher. So how do we find that right now? Two-try failure pattern. Here we are below the moving average. I would love to see another attempt to go lower, right? It would look very similar to this one. 1, 2, go, right? Same thing. 1, 2, and then again, the appropriate signal now, right, for the buy going higher. Now, what if we just jump, right? What if we just jump, overnight session? What if we just, right? What if we just jump? If we jump going higher, it's probably going to be a pretty aggressive move. So it's going to be a narrow channel, if not a spike, which means any pullbacks here are going to be traps, right? It'll be a short covering rally. The personality of a short covering rally, because the sellers from back here are getting out now. That's what a short covering rally means. The short sellers are covering their positions, right? Covering just means, right, getting out of a short position. It's an old school term from the stock trading days when you had to borrow your shares, right? And you're covered by repaying those shares back. These are futures. We don't borrow anything, right? We want to sell, we sell. We want to buy, we buy. It's one of the beautiful things about the futures markets. But look for that strong pop, 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 right? Pop higher. You're probably not going to get the deep pullback there. I would love to think if we do run higher here, I would love to think we could look for this as a nice deep pullback. And this will definitely be something that is worth looking for, right? For that pullback going up, right, and looking for that buy off the low of this hidden channel, the buy off of that reversal line. But the problem is, though, if this thing does, again, 1 try, 2 try, if it just pop, really jumps higher here, find those swings and looking for traps, right, to finish off this move back up into that, right, back to the range. Now, don't get too greedy on this, because really at all reality, the target is back at this 16,900. But obviously, if you have an extra contract to leave as a runner, might not be a bad idea because of this big pendulum swing. Now, how do we get short on this? It's not going to be easy, right? The bears want to get back down to retest the low. If the bears can retest this low, we are right back to being bearish again. Okay, so if the bears retest that low, we're now timeout. Is this a new range to sell off the high, or do we go through it, right, into a new channel? We'll know more about that, right, tomorrow morning. What I'm basically looking for here is a strong move through. If we can get that strong move through, remember the halfway point, right, is going to be the sweet spot, right? That halfway point's the sweet spot. That way, traders can put their stops up here. I'm not going to do that, right? It's a big stop for me, right? But the idea here is, if that's my target, right, down here, that halfway point where you can balance a 1-to-1, right, risk reward. The bottom line is that's a little bit big for a stop there. I put myself above that, right? But I'm looking for that pullback, right, to finish off that move back down. But again, it's going to be a real strong move, right? It's got to be that real strong move down. And again, we don't want to chase it because we know where that target is, down around 15,700. We want to sell, right, at resistance, and that prior support, right, can be used as that level of resistance on the way back down. Again, we'll know more what it looks like once we get back down to retest that low. Do they keep breaking lower for a new channel, or do we bounce right into that range? Right now, it looks good for the buyers, but we'll see what we get in the next few hours, guys. So wrapping up tonight on this nightly newsletter, right? As you can tell here, I get a lot of great knowledge that I really enjoy sharing every evening on our newsletter. If you want to keep this going, if you like what you see on my newsletter, you're going to love being a client here at School of Trade. Pick up the phone tonight. Give me a call toll free in the office. It forwards to my cell phone. I love to answer all your questions. Check out my beginner, intermediate, and advanced classes. Being a successful trader is all about strategy, it's all about skills, and it's all about mindset. I teach the trader's mindset in the beginner classes, all the skills you need in the intermediate classes, and we wrap it all together with a proven and long-term, right, successful strategy in the advanced classes. I've got a great free trial on the homepage. We've got live support, right, and again, that great free trading class. It's right below the video, right on our blog or in the YouTube description or in the upper right-hand corner. If you need any help along the way, give me a call. I'm always here to help out. Hope you learned something. Hope you use it to earn something tomorrow. And as always, don't forget, we open up our trade room 8 o'clock Eastern time tomorrow morning. If I don't see you guys tomorrow morning in the trade room, we'll come back and do it all again tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.